Good morning, everybody. It's February the 21st. Here's the ETF Cloud Chart Market Review. We're going to look at the S&P 500 SPDR ETFs this morning from an Ichimoku Cloud Chart perspective. These ETFs, like mentioned, S&P 500 ETFs and the sector ETFs. So we're going to look at sector rotation and what's happening in the which sectors are strong and weak from an Ichimoku Cloud Chart perspective. Right, jumping right into the Pro Real-Time platform, we start with the S&P 500. We can see we've had a nice steady uptrend. We had a strong trend since the index broke past cloud chart resistance, and the uptrend remains in place. We now have consolidation risk just to consolidate recent moves back down to retest these old highs for support, but so far the overall long-term trend remain up unless the cloud starts indicating a twist in the trend, with the top end of the cloud as key support with short-term pullbacks possible to test support at these levels. Okay, MACD buy signals still remain in place with downside risk here to the 20-day and 20-day, 10 and 20-day moving averages over the short term. Okay, looking at the materials sector, we can see XLB, steady uptrend remain in place. We've had a brief little MACD buy, recently a MACD sell, so now it's consolidating its recent move. Consolidation risk back down to the top end of the cloud here. That's where we were looking at for a rebound at these key cloud chart levels. But so far, underperforming the overall market for a couple of days, and watch out for a possible MACD buy signal when we get to the key cloud chart support levels. Okay. Real estate sector, yeah, still struggling with old highs, resistance 3148. These cloud chart levels are key resistance areas. Consolidation risk back down to the top end of the cloud here. If these resistance levels remain in place, we could see to test these levels for support. Okay. Consumer discretionary, yeah, strong rally, nice MACD buy signal. Trend is still up based on the cloud. Somewhat of a period of underperformance here versus the S&P 500. We've recently had another MACD buy, bit extended, expected to come back and retest the old highs here for support at 85.65 and 85.15. So we could see a dip back in there and then resuming its uptrend. So consolidation risk to the downside remain in place. That's for consumer discretionary. Consumer staples, similar situation, slightly extended. Need a bit of a consolidation here. Watch out for the 53.48 level as a key support zone to come in if there's a consolidation coming. Had the MACD buy signals, looking strong, grinding higher, and testing old highs for resistance. So watch out. This 54.34 is a significant cloud chart resistance level. So we could see a reversal and a consolidation at this level back down to retest, to back down to retest the support of the old cloud chart levels here. But still strong uptrend in place and looking for buying at the pullbacks for consumer staples. Energy select, bit of trouble here. MACD sell signal remain in place for quite some time, grinding lower, collapsed through the cloud, couldn't find support of the cloud, then rebounded from the cloud chart support here, now back below the cloud, front end of the cloud indicating a downtrend in place. Significant underperformance since December or January versus S&P, so struggling to maintain momentum, looking for a bottoming out situation here, looking for support. So these old lows here should be the next key support zone tested, but currently in a bit of a trouble as the cloud is now the new resistance zone, and the old lows here, expect these lows to be tested. The front end of the cloud not painting a pretty picture. Outlook still negative. Financials in need of a bit of a consolidation here, back down to the top end of this range trade here. Could see a pullback to the 20-day or 10-day moving average here, and then the top end of the cloud here is the next key support level. Strong uptrend in place, but watching out for consolidation risk remain high here, as we can just see how recently it's moved over the last couple of months. Okay. But we still have a MACD signal in place there on the financials. Healthcare, also a situation. We had a strong rally since the MACD buy signal here. Moving higher, fighting old cloud chart resistance at 73.55. Watch these levels for a consolidation. It could come back and test and rebound at the old highs here at 71.94, 72 zone. And that would be the next entry point. But you could take some profit off the table now since the MACD buy signal, and the top end of the cloud here at 71.80 could be the next entry level for the XLV healthcare ETF. Industrials also having a strong rally since the MACD buy signal, up quite a couple of points. Old highs here should be the next support zone. If there's any consolidation taking place, could see it come back down here and then rebound further from that consolidation area. But consolidation risk remain, strong uptrend remain in place. Front end of the cloud still in good shape. So far so good, as they say. Technology in need of a bit of a consolidation here. These old highs here should be the next consolidation zone, corresponds well with the front end of the cloud. Cloud still indicates strong uptrend in place, been outperforming the S&P 500 for quite some time. We've had another MACD buy signal here and an uptrend, so steady as she goes with consolidation risk remaining in place. But you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, I do expect a bit of a consolidation back down to test the old highs here for support. So watching these levels here very closely for a possible rebound. But now, as it stands here, we'll be looking at taking some profit off the table, or just moving a trailing stop up as it moves higher. Utilities also struggling with old resistance levels here from cloud chart shadow, with 50, 59, 52 as significant resistance areas. So watching out, yeah, it's grinding higher slowly. Front end of the cloud still looking good. We've had the MACD buy signal, so just watch it until it gets to about 50, 25 and 50, 50. That could be the profit-taking area after this MACD buy signal. And then just back to the S&P, do expect some form of a pullback here, and then for the March rally to continue as the trends move higher. But so far, MACD sell buy signal remain in place. Looking for a sell here to take profit, but do expect the consolidation to come back down to retest these old highs and then move higher. But so far, still uptrend remain in place. And if we just look at the weekly, we can see a very, very strong uptrend on a weekly cloud chart basis. So far, so good. Until next time, happy trading.